Since the introduction of Europe's sweeping markets legislation, MiFID II, on the 3rd of January 2018, the cost of market data has increased for both banks and asset managers. Market data is provided by trading venues and informs investors and traders about the worth of assets they're planning to trade, such as shares, bonds, and derivatives. This includes the price, bid-ask quotes, and market volume. Market data is available across thousands of global markets, including stocks, indices, forex, and commodities. Traders need this data from trading venues in order to ensure they're getting the best possible execution price for their clients. Market data is used to determine how they trade and to calculate market risk. However, users have seen the amount they pay for market data rise substantially over time. Some regulators have publicly said that following the application of MiFID II, the costs of market data at times reached up to 400% more compared to prices charged prior to the 3rd of January 2018. So why is the higher cost of market data a problem? MiFID II has failed to keep market data prices at a fair level, and as a result, overall execution costs have increased, making life more expensive for everyone. This is because rising costs ultimately impact the whole financial ecosystem, from trading venues to brokers and vendors, down to their clients and ultimately end investors. This could be a pension fund, for example, which ends up charging higher fees to the person on the street saving for their retirement. Clearly, therefore, steps need to be taken to reduce the cost of market data. So what can be done to solve the problem? MiFID II aimed to reduce the costs of market data by requiring that it's priced on a reasonable commercial basis, by clearly linking the amount trading venues could charge to the costs of the production and dissemination. However, market data users have not seen a benefit from this provision, as costs are often cross-subsidized with other services. This means that price increases can be justified by the cost of other services which are not directly related. One solution is to review the existing Level 2 MiFID II provisions to ensure costs are transparent and are limited to the costs of producing and disseminating market data. Trading venues should also be required to disclose quantitative information on the specific costs which form the basis of market data pricing. This will allow consumers and regulators to determine whether market data is being priced on a reasonable commercial basis. If enforced appropriately, this will lead to everyone being charged a fair price for market data and ultimately a better deal for end investors.